Good morning and welcome back to the Broadcast Retirement Network. This is BRN AM for Monday, October 7th, 2019. And here are your top stories. Stock brokerages wage a price war, and rural America's medical deserts. Well, it's Social Media Monday, and that means it's time for us to take a look at the latest trends on the social media platform LinkedIn. Joining me now, Senior Financial Services Editor for LinkedIn, Devin Banerjee. Good morning, Devin. Happy Social Media Monday to you.
How are you, Jeff?
I'm doing well. I had a good weekend. Thanks for getting up early. Big stretch. Thanks for coming on. So there seems to be, we've had battles for fees, and fees continue to decrease in the asset management world, but it looks like, based on what you're following on LinkedIn, this is now impacting the brokerage world.
That's absolutely right, Jeff. We've seen a string of dominoes falling, if you will. So 2 weeks ago now, Interactive Brokers came out with a new offering, IBKR Lite, which features zero commissions, no charge for trading stocks and ETFs. We quickly saw, so this was last week, Charles Schwab, storied institution around for decades, come out and say that it's, $4.95 commissions that's been charging for a while will go to zero. Just within a day or two following that, we saw TD Ameritrade and E-Trade follow. A lot of analysts out there are expecting others, like a Fidelity, for example, to fall in line after that. Last week, we saw a big reaction on Wall Street to these moves, a very negative reaction to the stocks of these companies, especially the ones that are more reliant or exposed to commission revenue. So TD Ameritrade, for example, in that case. But, analysts are coming out and saying the long-term effects of this are going to be interesting and many. One is probably some consolidation in the brokerage industry. Some of these firms that may not be able to compete, may not be diversified enough to compete, could be swept up and swallowed. Analysts pointing to E-Trade as one of those potential targets, for example. And a lot of people came out talking about Robinhood last week. So Robinhood, for the uninitiated, is a startup just founded in 2013. Here in my neck of the woods in California, recently valued at $7.6 billion by VC private investors. But it's a no commission trading app and platform. And it's built more than 6 million users in just about 5 or 6 years. Most of those users coming very recently. And so it's a lot of people pointing to Robinhood as the source of these moves, saying, Robinhood has proved that if you want volume and you want users and you want loyalty, then zero commission is the way to go.
Devin, what's the business model here? So Charles Schwab, TD Ameritrade, well, let me back up. So when you're purchasing a brokerage service, typically you might pay a monthly charge that is based on your assets in the plan or on the platform. But then if you make a trade during the day, intraday, or just within a period of time, you get charged a commission fee, because there are things that have to happen behind the scenes for trading. It doesn't just happen, it happens electronically, but things have to go out to the exchange, you get a price, all that kind of stuff. So I understand that model, but how does Robinhood, what does this new paradigm look like?
Yeah, absolutely. So a lot of people came out and said, look, you need to remember that when you're not being charged anything, then you are the product, right? Mm-hmm. And your activity and your information is the product. So a lot of people are coming out and saying, yes, you might have no commissions with these services now, but they will try to sell you all of their other services, their advisory services, more white glove, client services. There's also the question about execution of your trades. This is an issue that Robinhood has to address publicly a lot. Is if they're not charging you a commission, are they making money on the back end somehow, selling that order flow? Is your execution quality a bit lower? By that, it means, is the price bid spread when you put in a market order, for example, are you losing some of that spread to other parties? So a lot of people came out very quickly on the platform and said, no commissions, yes, but execution is going to be a question, and other services that these companies may try to put down your throat will be a question as well. I mean, some of these brokerages have diversified, as I said, into other services, and I think there will be some consolidation. And some people are saying this might have knock-on effects for Robinhood as well.
Mm-hmm.
Some of the people who want those other bulk services from a Schwab or a TD or these other big brokerages might now say, look, Robinhood's offerings are still a bit limited, and I enjoyed their user experience, but now these more bulge bracket service firms can offer me more services and zero commission. So I think a lot of effects that remains to be seen, but this was a real big shift in this industry.
Yeah, I mean, in the asset management industry, as you know, because you cover this, there's a shift from active to passive. We've seen ETFs soar in terms of asset flows, passive investments, what are called index funds are soaring. And I think you make a great point. And I think transparency and understanding what you're getting. So, I can tell you as someone in my former life looked at bids for record keeping and asset management services. People need to get paid for the services they're providing. And so they will find ways to do that. I'm not saying there's anything nefarious, but you need to understand what you're going to be paying, because if someone's charging you zero over here, but maybe their expectation is, like you said, to get advisory services or some other level of service, or how do they prioritize your trade, as you pointed out? So I think a lot of things for people to consider. You can't always say, okay, at first blush, this is going to be perfect, this is going to be great. I think you have to look at it, and obviously the market's going to adjust.
And also I should mention the behavioral effects on everyday investors are going to be very interesting. This is something I care about a lot, which is, if everyday investors now say, well, it's free for me to trade, to buy and sell more often, will that compel them to trade more often? And there's so much research out there that shows that churn and trading often and thinking, everyday investors thinking that they are wise, brilliant day traders actually does not pan out. And I'm very curious to see if those effects appear as well.
You're speaking my language. I grew up in the retirement industry back when we did quarterly or daily or semi-annual or annual valuations of the retirement plan. So you couldn't trade daily. I think that was a blessing and a curse in the same way you do, in that you actually made people go out and look at their balances and make trades and try to time the market. And there were some instances, and I think in like 2002, they had to put gates for foreign types of mutual funds. People were kind of trading those because they traded on different exchanges. So again, I think it's really interesting to watch how now this flows from asset management to the brokerage firms, see how they all handle it. And you're right, consolidation and diversification are going to be important for these businesses going forward. And when we come back, Devin's going to stay here. We're going to shift gears, and we're going to talk about rural America's medical deserts. So stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms, especially for the smaller businesses? I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network. Welcome back. America has the greatest healthcare system in the world, but it continues to be under strain. Now, a recent report from the Washington Post states that rural America is now becoming a medical desert. Devin Banerjee's still with us. Devin, I know you're covering another amazing story, and that is the availability of medical care in the rural parts of the United States. What can you tell us?
Yeah, absolutely, Jeff. This was a story we featured last week on the platform and saw such an outpouring of anecdotes and experiences from LinkedIn users in the U.S. So this is the story about medical deserts, areas of rural America where medical care is just, the supply of medical care is just not there. So the federal government designates about 80% of rural America as medically underserved. And these areas, have 20% of the population of the U.S., but fewer than 10% of medical professionals in the U.S. And this was all based on an amazing Washington Post story last week by one of its Pulitzer Prize-winning reporters who followed a couple of doctors around in Texas, one of whom was covering an area about the size of Maryland as the only doctor in those three counties. And basically he's traveling around taking calls from hospitals, trying to deliver emergency care and healthcare in these areas. So, this is such a huge issue. We hear about, the shortage of doctors in the U.S.
Yep.
It's really in these rural areas. Another issue about it is that rural doctors are on average 3 years older than urban doctors. Half of rural doctors are over the age of 50. A quarter of them are actually over the age of 60. And so health officials see going forward over the next decade, the number of rural doctors declining by almost a quarter, about 23%, while they expect the number of urban doctors to remain flat. So this problem is bad now, and it's only predicted to get worse. Now, this ties into something actually you and I talked about just a few weeks ago, which is what organizations are taking steps, and what are those steps to try to remedy this? Well, one of the steps is coming from the government. The federal government and certain state governments are trying to, for example, forgive medical student debt for doctors who can relocate to these areas. They're trying to support hospitals to be able to compensate doctors accordingly for them to relocate. And then you and I talked a couple of weeks ago about some medical schools realizing that its graduates were choosing to go to urban areas because of the pay there, and they were looking for that pay to pay off all of the student debt they were accumulating going through the medical school process. So certain schools, we talked about Cornell, Columbia, UCLA, NYU, have started putting together donor programs to basically offer, in the case of Cornell, full rides for more students. And as we talked about, medical students who do graduate with debt, graduate with, on average, $200,000 in debt. So, it's a very expensive process, and without these steps in place, it's led to a lot of inequality. In society, with the medical profession is basically has been attracting people who can afford this education and kind of and leaving aside those who would be great doctors or want to be doctors but can't afford it. And it's created this rural shortage of doctors. So as I said, huge problem and only predicted to get worse. But there are these steps that some governments are taking, some educational institutions are taking. Donors are really focused on this. As we talked about, some of these schools created these programs only at the behest of donors. Donors
Right.
came and said they see this issue as one that they want to tackle with a sole focus. So it'll be interesting to see how this plays out, but it really affects everybody. It affects healthcare. And so this one's going to be really top of mind going forward.
So Devin, earlier or last week with our friend Daniel Klein from the Motley Fool, we talked about Amazon getting into the healthcare arena, and Daniel talked about Teladoc. Do you think that is a way to kind of mitigate this? Are there startups that, we talked about this on the podcast with Lydia Ramsey, that there may be startups that are trying to address some of that? Is this a possible path forward? Because you're right, we have a gap in terms of the number of doctors, and we're not going to be able to just create doctors by waving a magic wand. It takes years and years, at least 6 or 7 years, to get someone out through medical school and get them into a particular locale. So are there startups, are these types of things that we can hope to look for, the Walgreens, the Walmarts, et cetera?
Yeah, it's absolutely a path that's being experimented with. As a matter of fact, in the Washington Post story, one of the hospitals in Texas that the reporter was at was using a Teladoc to address some patients. We are seeing so many startups working on this issue on access. I mean, basically, people are realizing, as you said, we can't wave a wand and create humans with these skills or move humans to areas the size of Maryland at a moment's notice. And so there is a lot of opportunity, I think, some low-hanging fruit for telemedicine. Some hospitals, though, just haven't actually gotten over the hump in approving those type of services. Some county, health organizations have also not approved that. So I think, if that happens, then we'll have some more access. But I think some of the more rural deserts, as we call them here, are kind of holding out hope that with higher compensation, with forgiveness of loans, they can attract more personalized care on the ground. So there's still some tension, I think, in the system there. And we'll see how that plays out. But I think these medical schools that are trying to just get more people in the door and allow more people to consider rural options afterward, I think that should hopefully move the needle a bit.
Yeah, it also makes you think about, when you want to retire, when you want to move, where are you going to move? You've got to look not only at the cost of living, right? That drives a lot of people, the weather, how close you are from your children, if you have children, or your nieces and nephews, or your family, but also where you're going to get quality medical care. That to me has got to be top of mind. And a lot of people don't think about that, Devin. I mean, we go back to what we've always talked about on this show and in other places, where retirement and savings isn't just one issue. It's all these issues combined that people need help thinking through them all.
That's absolutely true. And this is where we see counties and cities and state governments really step up their incentives to attract people, because they realize, just for example, the boomer population that has all of this saved wealth and is considering where to retire, they want people spending, their retirement money, or at least spending some of their money in their states, in their cities,
sure,
in their counties. And they see these gaps. Healthcare is a gap, for example. And so the incentive, as you said, is not just it's not just about healthcare or about debt forgiveness or anything like that. It's all intertwined. And we're seeing a lot of, as I said, states, counties, and cities really understand how interconnected things are and try to make their incentives much, much greater. One of which is, adequate, high-quality healthcare and medical care for people to retire or younger people to move to these places and be remote workers there, for example.
And it puts a lot of strain on caregivers. Who are also managing a career, as we talked about last week with John Scott from Pew. Devin, always a pleasure talking with you. I wish we could end on a high note, but at least we're bringing this to light. Have a great work day and a great work week, and we'll talk to you later on during the week on the podcast, my friend.
Sounds good, Jeff. Take care.
Well, folks, this wraps up this episode of BRN AM. Have a financial topic or someone of interest that you think we should interview? Drop us a line. And don't forget, for all the latest news in retirement markets, technology, personal finance, and more, check out today's edition of The Morning Pulse. So until tomorrow, keep on saving, and don't forget, roll with the changes.